Here is the overview of today's gold market news. Gold price performance and technical outlooks. Central banks and investors' activities drive gold demand. Impact of geopolitical tensions and economic concerns on gold safe haven status. Navigating gold prices, the impact of interest rates and economic trends. Finite gold supply and growing industrial demand surging gold value. Here is the latest gold price performance and technical outlooks. Gold's price surged from $2,063.73 per ounce on January 1, 2024 to $2,734.46 per ounce by October 25, 2024, marking a growth of approximately 33% in under a year. Gold reached an all-time record high of $2,772 per troy ounce this week, with year-to-date gains around 33%, outpacing the broader stock market by approximately 10 percentage points. Gold currently remains elevated at around $2,740 per ounce, having reached a record high of $2,758 earlier in the week. It is up 0.18% despite market pressures. In comparison, gold has returned 67%, outperforming the Standard & Poor 500s by a margin of 63% since the bull market began in October 2022. This performance positions gold as one of the top investment choices globally. Analysts' market outlook suggests that gold's upward trajectory may continue, driven by persistent interest from central banks and investors amid ongoing global uncertainties. Technical indicators suggest that if gold clears resistance at $2,750, it could target $2,800. However, support levels exist at $2,708 and lower Fibonacci retracement levels at $2,699, $2,681, and $2,662. Moving on, let's have a look at the central banks and investors' activities driving gold demand. The activity of central banks, particularly in emerging markets, are significantly increasing their gold reserves. This trend is motivated by economic uncertainty and the need to diversify from fiat currencies, creating strong demand that supports rising prices. The historical role of gold as a stable store of value makes it particularly attractive during periods of economic instability. Both individual and institutional investors are drawn to gold for short-term speculative gains and long-term security. This influx leads to increased trading activity, further driving up prices. Recent record highs in gold prices have altered investor perceptions, shifting views from potential ceilings to expansive growth opportunities. The SPDR Gold Shares Exchange Traded Funds, with $78 billion in assets, has seen significant inflows, while physical gold sales, such as those from Costco, have also surged, indicating strong consumer demand. Next, here are the updates on the impact of geopolitical tensions and economic concerns on gold safe haven status. Ongoing global uncertainties, such as election year dynamics and international conflicts, have heightened gold's appeal as a safe haven asset, prompting more investors to include it in diversified portfolios. Global conflicts, such as Russia's war in Ukraine and tensions in the Middle East and Asia, have increased geopolitical tensions and gold's appeal as a safe haven asset. Investors are gravitating toward gold amid rising uncertainties. Concerns over the impact of soaring U.S. debt levels have diminished the perceived safety of treasuries, prompting investors and central banks to favor gold as a more reliable store of value. The potential for a Trump presidency has led to increased investment in gold, driven by fears of rising government deficits and inflation. Whether he wins or not, the outlook for increased debt supports gold's value. The tight race between Trump and Harris in key swing states adds to U.S. elections uncertainty and increased gold's appeal. Recent polls show Trump slightly ahead in states like Pennsylvania and Wisconsin, contributing to market anxiety. Let's have a look at navigating the gold prices considering the impact of interest rates and economic trends. Historically, falling interest rates boost gold prices. Despite recent interest rate hikes, expectations of multiple rate cuts by the Federal Reserve and other central banks are anticipated to support gold prices further. Rising U.S. Treasury yields and a strengthening U.S. dollar index, up by 0.29%, are capping gold's gains. The 10-year Treasury yield rose to 4.23%, impacting bullion prices negatively. Durable goods orders fell by 0.8% in September, which was better than expected 1% estimated decrement. While durable goods orders remain weak, improving consumer sentiment suggests potential resilience in the economy, impacting investor sentiment towards gold. Consumer sentiment has improved in October, rising to 70.5, indicating growing optimism despite inflation concerns. The Chicago Board of Trade data indicates expectations of 49 basis points of Federal Reserve easing by year-end, which could influence gold prices positively if realized. Next, the finite gold supply and growing industrial demand has led to a surging gold value. The finite nature of gold, coupled with costly and time-consuming mining processes, contributes to its price increase. Industrial demand from sectors like electronics and green technologies is also rising, adding to the pressure on supply. Technological advancements are enhancing gold's utility in various industries, reinforcing its value beyond traditional investment roles.